Hey, hello guys. So today's another video. So we're gonna have to talk about uh that little square right here. So for those of you that are veteran and you're not new to trading, so what we are looking at right now, it's you can call it range, okay, or consolidation. All right. So basically, market was on a uptrend, and then all of a sudden, so we have a little bit of range here. So you can use that to determine the next move. Okay, you can take that for instance right here. All right, let me fix it. Okay, there we go. We can put that a little bit higher, even right here. Alright, so basically market was on the uptrend, and then so you have a little bit of a range, and then market has to consolidate and decided when will be the next move and where market headed. Alright, so for those of you, if you can't determine the next move, so you can start reading those candlesticks. Alright, so we have different type of candles. So these ones are the basics, the most regular candle. So if you're looking at it right here, so let's start from here. So we had an up movement, so we have this red candle down here. As far as you can see, that's probably 50% or 60% of this candle. Okay, so that tells you that there's a pressure from the bearish. Alright, so when it's going down, it's bear or bearish, or when it's coming up, it's bullish or bull. Alright, so on this movement, it's a bearish candle coming down. Okay, so closing this, and now it's obvious. It's obvious we have a movement to the downside, and allow me a moment. Alright, so starting from here, so it's obvious. So we have a movement to the downside because over here we have this candle. So take out 60% of this bullish candle. So now we have a second bearish candle. So and in a different situation, so you could have said there's a weakness, but it's not really a weakness. Alright, so as far as the market goes, so we do have what we call continuation. So we have a explosive movement, and then whether you have a range to determine where the market going, or you can have a continuation. So for me personally, so I could say, so this one, it's a continuation to the downside. So that's why you have this candle right here. So and so much so you have a little wick on the top of it, so meaning that bearish taking control over here, and this one, it's a continuation to the downside. So now you have this candle testing this over here. So if it's a red candle, so the opening, it should be right here. So candle opens up from here, go up a little bit, testing this area, and then coming down, and then just a little rejection. Okay, just a little wick, not too bad. So whenever you see those wicks, so meaning that there's a level in that area, so market needs to acknowledge it. Sometimes market can test it and then return back, reverse to the upside, or break through and then retest, continue to the downside. So remember, we're looking at gold. All right, so gold, especially if you're familiar with gold, so you know that gold really taking a retest very serious. All right, so whenever you have gold breakthrough or break any support line, so over here, so you may call it support. When it's on the top, it's resistance. All right, so if gold breakthrough, so there's gonna have to be another candle or another movement coming up, retesting this level to validate that it's really broke through it, and then it will give you the next move to the downside. All right, so until then, so you have to be very patient. All right, so over here, so we have a green candle. So due to the fact that we have a little wick over here, and then the bullish make an attempt to continue upside. Okay, so as you can see, candle opens up over here, go up, cover, I would say 85% of this. 85% of this candle, but due to the fact that there's a weakness, remember this is a strong area, so bull cannot go past it, so it has to come back. All right, so we have this one, it's a doji. So whenever you have those two, meaning that uncertainty in the market, so meaning that there's no decision yet. So if you're a trader, so you lack of patience, so you're gonna have a lot of trouble. So you have to be really patient with our market, because you don't know yet. So over here you can't really take any position. You're gonna have to wait until market decided if it's going bullish or bearish. But what I've learned over the years, so you have to wait, give the market room to breathe. All right, so it's the same thing. So you cannot expect there was a movement to the upside, and then after 3 candles and the market coming crashing down. No, it doesn't work like that. There's gonna have to be a ranging moment like you see right now. All right, so to make it shorter, I don't want to make the video long. So all those areas are range. All right, so let's start from here. So you can have this, consider this one as a bullish, very powerful. So you could have used that as some type of market breakthrough it. Okay, but you're gonna have to see the next candle. Okay, always need confirmation. So you need signal, so the market signaling that, hey, we break through the upside. But is it so? If you don't wait for confirmation, so you probably will have a fake out. They probably fake you out and then you lose your money. Okay, so now once you waited for confirmation, so now you have this candle right here. Candle opens up to the up, do the little wick over here. Remember, this is a respected area. and then market come down, cover. Let's say this one probably 75%, 75 to 80% of this green candle. Okay, so test it out with a wick, meaning that bullish. So they had some strength. They tried to push it off, but unsuccessful. All right, so therefore candle close bearish. So come to this one. So we have this candle. This candle open up here. Okay, remember. So this candle open up here. So whenever you have this bullish candle, so there might have been some type of movement over here. So we would call it inside bar if this candle was a green candle and then increase to the size of it all the way up, it would have engulfed this one right here. Okay, it would have engulfed this candle, and now you could have traded to the upside. But to the fact that candle came up and had a little rejection, and then you're gonna have to stay put. Okay, so rejection, come down, testing this level. So therefore market stay in a loop, in a range, still consolidating. And now here come this one. So green candle, no pressure, no explosive movement. So market still ranging to the side. Okay, so until we have this one. Okay, same thing, ranging, market stay in the range. So now we have this one, a green and clean candle. Okay, so until then, still you're gonna have to wait because this candle doesn't break through anything. It just stay in a range. Like I said, the range will be from here to here. As if you're looking at it from that angle, you'll see this green candle stay inside. So meaning that there's no pressure for market to break through. And then from there you can really decide if it will be a bullish position or bearish position. So come to this candle right here. Market open up, candle open up here. To the upside, to the upside. This one could have been a good one, but there's a little rejection. Okay. And then now, if market was really breaking through, so it would have given you a different type of candle, probably like this, or a red candle inside of two greens. So like I said, in those area it's common that you do have inside bar, so it would have been used as some form of support whenever the market come back, so they can use it as a support, as a point of reference. All right, so let's say it that way. All right, so right here, so we have a doji. So doji meaning that there's no pressure, no strength, no volume at all. Okay, so opens up here, wick a little bit, come down, rejected, bullish, push it up, close red or orange, And then if you look at it right here, so you see there's a decline here in the size of those candles. This candle opens up, same thing, just a little foot, a little wick, come down, and then bullish pressure, push it all the way up. But due to the fact that this one is superior than this one, so you still have hope. So there might be a movement to the downside. So that's how the market start giving you signal, as you can see. So this one is smaller, so you have the wick a little bit higher. Okay, same high probably. So whenever you see same high, that's a sign of weakness for the bullish. And if you start seeing lower low, it's not even on trend. So whenever the market coming down, so we call it downtrend, and when it's coming up, it's uptrend. Alright, so if you look at it right here, same thing applying from a trend also can be used as from those candle. As you can see, that's, you can consider this one as a low, which is the wick, or if you want to look at right here, so lower low, okay, even the same high, lower low, and then when you come down here you have even lower low, and now you start seeing lower high. So this one is the high, lower low. Okay, so whenever you see that, so that's a sign. So it's kind of fading out, starting from the uptrend, so that it can transition to the downtrend. All right, so now we have a little bullish, a little green candle opens up here, testing this area, coming up, but no pressure, no strength to break through. So now for those of you that are anxious, so you want to make money fast, you would see that and think, oh, it's going up, it's going up. Or let's say for instance, oh, this is a sign of a weakness for the bullish. Alright, so I'm gonna put my stop loss here, and I'm gonna trade to the downside. And mistake. So always remember that. So when before any big movement, market has to give his last breath. This is the last breath. Okay, this is the last breath. So whenever you see that, anybody that has a stop loss here, your position was right there and you put your stop loss above that, you're done. And some trader call it liquidation. Okay, so they liquidate your money and then market do exactly what you saw. Okay, you felt it. You felt it, that market coming down, but due to the fact that you couldn't wait, and then market come up on a single move with this bullish candle with strength, and you thought that, hey, it broke through, and then take your money and then give you a bearish engulfing candle. That's the one. You see, that's the difference. So now with this bearish engulfing, you could still take 1 or 2 trades, but be mindful of certain area. Okay, so as you can see, so now you start seeing lower high. I mean, this is the high, and this is the low. And always remember that. So there's a level over here. So even though it's coming down, it may not be right now. So it might have been after a couple hours. If you look at it, check this out. You see? So this area, this zone, so market gonna have to break through it. Okay, so on this one you have two level. Remember, it's two sides, always two sides, and then the third option is the range. So what we call consolidation. Okay, so this is what it is. Sorry. So once you have this move over here, bearish, come down, test this area, and then you have some bullish movement. Okay, that's it. But still, it's not final, because you can see that this area, it's lower than this one. So this is a sign of weakness as well. So now you're gonna have to watch out for both this area and then over here. If market really passed that level, so there's gonna have to be another movement lower than this one, probably from here, or just a little movement over here, but it cannot pass that level. Okay, so that's how you have to make sure you don't lose your money. All right, so this is a quick reference on how to read those candles. So I will come with more videos on how to determine whether the market will go up or down. So those areas that you need to pay attention to. Alright, so that was it, guys, and this is a small video, and if you're interested in this type of content, please share this video with friends and family, like, subscribe, comment, and then I'll see you on the next video. Alright, so stay tuned. Thank you.